Good afternoon. This is Shindo. More news today. Economic news. Of course, China is having a major economic crisis, which has been felt a little bit here in the United States, but will continue to be felt in the upcoming weeks and months and years. This is a article from The Guardian. Title of the article is "Sell Everything Ahead of Stock Market Crash," says RBS economists. Royal Bank of Scotland warns of, quote, cataclysmic, unquote, year with slumps in shares and oil and advises clients to shift to bonds. Investors face a, quote, cataclysmic year, unquote, where stock markets could fall up to 20% and oil could slump to $16 a barrel. Economists at the Royal Bank of Scotland have warned. By the way, oil, I think, today is at $37 a barrel. And although that's great for us who have cars and who can drive, it is a killer when it comes to the economy in the long run. In a note to his clients, the bank said, quote, "Sell everything except high-quality bonds. This is about return of capital, not return on capital. In a crowded hall, exit doors are small," unquote. It said the current situation was reminiscent of 2008, when the collapse of the Lehman Brothers investment bank led to the global financial crisis. This time, China could be the crisis point. Stock markets have already come under severe pressure in 2016, with the FTSE 100 down more than 5% in its worst start since 2000. In the U.S., the Dow Jones Industrial Average has made its poorest ever start to a year. Oil prices have also fallen sharply on fears of lower demand and supply glut, especially with Iran, due to start exporting once more when sanctions are lifted. Tensions between Iran and Saudi Arabia make it less likely that OPEC can agree to cut production to halt the slide in prices. Brent crude is down another 1% at $31.18, its lowest level since April 2004. Investors have been spooked by fears of severe slowdown in the Chinese economy and fall in the value of the yen, not helped by a crash in this country's stock market, despite attempts by the country's authorities to curtail selling. Andrew Roberts, FBS's credit chief, said, quote, "China has set off a major correction and is going to snowball. Equities, and credits has become very dangerous, and we have hardly even begun to retrace the, quote, Goldilocks love-in, unquote, of the last 2 years." Markets have been supported for some time by low interest rates, stimulus measures from central banks, including quantitative easing, and hopes of economic recovery. But with the Federal Reserve raising rates and the Bank of England expected to follow suit, that prop is being removed. Roberts says European and U.S. markets could fall by 10% to 20%, with the FTSE 100 particularly at risk due to the predominance of commodity companies in the UK index. London is vulnerable to a negative shock. All these people who are long buyers of oil and mining companies, thinking that the dividends are safe, are going to discover that they're not all safe. Quote, "We suspected 2016 will be characterized by more focus on how the exiting occurs of positions in the three main asset classes that benefit from quantitative easing. 1, emerging markets. 2, credit. 3, equities. Risks are high." RBS is not the only negative voice of the moment. Analysts at the JP Morgan have advised clients to sell stocks on any bounce. Morgan Stanley had said oil could fall to $20 a barrel, while Standard Chartered has predicted an even bigger slide. as low as $10. Standard said given that no fundamental relationship is currently driving the oil market towards any equilibrium, prices are being moved at almost entirely by fiscal flows caused by fluctuations in other asset prices, including the U.S. dollar and equity markets. Quote, we think prices could fall as low as $10 a barrel before most of the money managers in the market concede that matters had gone too far. Well, here I am the last few days really talking my Revelation stuff. Continue with that trend. Looking at Revelation chapter 6, verse 6. It says, and I heard a voice in the midst of the four beasts say, a measure of wheat for a penny, and 3 measures of barley for a penny, and see that thou hurt not the oil and the wine. This is a direction given to the third horseman of the apocalypse, the one of famine and stark economic hardship. Look at the last part of this. This is the third horseman, comes after the second horseman being the horseman representing war. First, let's look at the end of this. See that thou not hurt the oil and the wine. Of course, when John is hearing this in a dream 2,000 years ago, he thinks that this is a reference to olive oil. But of course, we know that these things have not come to pass yet, and what John was seeing in that revelation were things of this present day. I was told, and I have said this before, and I will say it again now, recorded for posterity today, the 12th of January 2016, I was told about 4 years ago by the Spirit. She told me that first the economic collapse would come, then the Great War. Folks, if you can't see what's going on, then you are as blind as they come. You have here the Royal Bank of Scotland saying, sell everything. That this is going to be, quote, a cataclysmic year. Well-renowned bank is saying this. Get ready for this. Just keep in mind, I warned you of this. And if you think the Christians are fools, you're right. You're absolutely right. Because let me tell you something, the ones that are telling you to get ready for this aren't ready for it. These fools believe that a spaceship or a great heavenly host are going to come and save them from this. Nope, not going to happen. As I have said, and I keep saying it, and I will say it till the day I die, we deserve it. You have a good Tuesday. This is Shindo signing out.